We've got some breaking news out of the Oval Office. President Trump just making some comments about Fed Chair Jerome Powell. Let's listen to what he had to say.
Whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him. I don't want to comment on that. That doesn't matter.
Mr. President, you said... When can we expect the FED to So after all that talk about whether he would he's examining whether or not to fire, he said he has no intention of firing Powell, and that's arguably what caused yesterday's pullback, the worry that we would be destabilizing the central bank, that there'd be some questions about our credibility in the world, that we'd become like Turkey if we fired Jerome Powell. But here he's saying, nope. No plans.
Well, fortunately, somebody got in his ear. I mean, the two texts or whatever, a couple days ago, I think over the weekend, his termination, and I'm paraphrasing, please don't at me, but something to the effect of his termination can't come fast enough. Now, I don't know if that was meant to be his leaving date in May of 2026 or his actual termination. I don't know, but he definitely threw it out there. Fortunately, I think somebody probably said, it's probably not going to be a great thing. We want to ratchet back a little bit. And that is a stabilizing thing.
By the way, we're looking at the after-hours action in the SPY, the S&P 500 ETF higher by 1%. NASDAQ 100 also higher by just about 1% in the after-hours on the back of these comments. So, again, being viewed very positively here.
Look, they're great headlines. They're great headlines, and clarifying that the Federal Reserve is left alone is a great thing by President Trump. And I think it's a dynamic for markets that I'm not so sure yesterday's tail-off was Powell related. I do think if you look at the dollar and you look at Treasury markets, they could have had a greater impact here. But ultimately, my sense is, and if you read strategists, economists, and market pundits everywhere, I don't think anyone was really expecting Powell to be fired. So I think market weakness is for reasons related to people worried about recession priced into stocks.
Yeah, I'll just push back at that. I mean, Kevin Hassett, his economic advisor in the White House, has said they were studying whether to do it. And I don't know why you would trust this back and forth. We've seen this, he blinked on the tariff stuff. It doesn't mean that they're going to do anything any differently. So just wait. May 7th, this is going to be fireworks, man. If they don't say the sorts of things that you expect into it, I think he's going to turn it right back up.
By the way, there's some comments also about China. He says that I think we'll make a deal with China. He also has told reporters that he'd be very nice in negotiations with Beijing and that tariffs on imports from the country would fall significantly following a deal, but not to zero. So also some positive comments regarding trade specifically with China, which would be a very important development for the markets here.
I'm just blown away. If I had told you that the United States stock market would rally because there was a reaffirmation that we were going to maintain an independent Federal Reserve, I don't even know how to wrap my mind around that. I just think the fact that
we were going to be potentially restructuring the U.S. economy to reindustrialize after 150 years. I mean,
fair enough, but I think this gets at like the very lifeblood of what makes capital markets and why there is, why the United States why the USD is a reserve currency, why there's so much faith in government bonds, et cetera. So it just kind of blows my mind, and for me, it just speaks to the fact that I do think you should continue to see volatile trading. You're going to look to pick your spots, entry and exit points, but the fact that this is actually a trading catalyst is a bit worrisome, and I think it's something that you should take into consideration as you're sizing your positions and when you're allocating capital.
The comments we've been talking to happening in the Oval Office just moments ago. Eamon Javers was in the Oval Office. He joined us now with the full report. Eamon.
Yeah, Melissa, that's right. I happened to be in the Oval Office with some reporters talking to President Trump at an event where he was swearing in the new director of the SEC. I was able to ask the president whether or not he intends to fire Jay Powell and whether he believes he has the power to fire Jay Powell. And what he said was, I don't want to talk about that in terms of whether or not he has the power to fire Jay Powell. He said, because I have no intention of doing that, never did have any intention to do that. He said the press simply runs away with speculation sometimes, but the president here reaffirming the idea that he does not intend to fire the chairman of the Federal Reserve or to attempt to do that. That was one item that was interesting to me. He also answered a question on China in terms of the tariffs and whether or not he's concerned about the impact on West Coast ports. The president said that ultimately he believes the tariffs are going to be good for the country overall. He was asked whether or not he's negotiating with the Chinese right now. He didn't provide any details or specifics about exactly where those negotiations stand. But I also asked him about tariff rates overall, and the Treasury Secretary's comments earlier today that the tariff rates, as high as they are, amount to effectively an embargo on trade with China altogether. The president says he does agree with the Treasury Secretary that it is effectively an embargo with China right now, but that he doesn't think that tariff rates are going to stay where they are right now. He said they're going to come down significantly. I asked him to what level. He said not to zero, but he implied sort of north of zero, but much lower than where they are now. So this is a president, Melissa, I've got to say, who seemed eager to send the kinds of signals to the stock market that the stock market wants to hear right now, wanted to be very conciliatory about the Fed, and very much to indicate that he's in deal-making mode with China, Melissa.
What's interesting, Eamon, is what you said about the president saying that he wouldn't comment on the status of talks with China, although Secretary Besson earlier in the day said that talks have not started. I'm wondering why there's daylight between the two explanations.
Well, reporters tried to press the president in the Oval Office just now on, what updates can you give us? Have you talked to Xi Jinping? Have you had any meetings? Where are these discussions specifically? And the president just sort of kept going back to his argument that there is going to be a deal. Things are going well with China. He's confident in his relationship with Xi Jinping, but no real specifics in terms of where those negotiations stand, who's meeting with who, what dates the meetings are taking place on, whether there have been any offers exchanged. Just the president asserting that he feels confident that there will be a deal here. I also asked him if he has spoken to or speaks regularly with Jay Powell, and he declined to answer that question.
All right, Eamon, thank you so much. Eamon Javers from the White House at this hour. Again, we're looking at an after-hours rally on top of the gains that we made in today's session on these comments regarding President Trump having no intention of firing Jerome Powell, and also the positive comments he's making about China in terms of resolving the trade embargo that is in place right now.
Yeah, all good. Maybe this will help the market to be a bit less squirrely. And
Yippee.
The word, huh?
Yippee.
Yippee.
Well, squirrely's a good word as well.
That's what he used, yippee.
Yippee. Yips.
Yeah.
Well, what's interesting also is, again, if you think about those kinds of comments, China tariffs are going to come down. The idea of tariffs as a panacea for a deficit is something I've just struggled with. And so this is really getting you back to dollar-friendly and rates-friendly, bond-friendly type rhetoric that I think can still strike a balance between let's level the playing field, let's get back what's ours, but let's not change how we actually raise revenue in this U.S. government. By the way, Eamon was like right there.
Right
like
there.
we had this breaking news.
Like,
there's Eamon.
I happened to be
So
in the
good,
Oval
but
Office when he made
so
these
yeah,
comments.
he's so
Should
good.
make one last comment here. Is this a good negotiating tactic to tell your adversary, to tell the folks that you're negotiating against what you're going to do? Because if you're China, it might just embolden you. So the idea that we're going to get these kind of half-assed sort of commentary back and forth, this and that's going to cause these rallies or these sell-offs, I just think that the risk is still to the downside until there's something materially coming out, not just these sorts of one-off comments like this.
By the way, in the after-hour session again, we're seeing the indices across the board rally by more than 1% apiece. We're also seeing shares of Tesla for one. Big China exposure. Obviously, the conference call is going on just 5 minutes in, but the China exposure aspect is sending it higher by 4%. Apple is up. NVIDIA is up. This is fantastic news for the market, Bonawyn, if true.
If true. That's the caveat, and I think you need to go ahead and stick your hat in that one. We've just seen so much back and forth that I'm just not sure how much confidence you can put on anything that you're hearing. At a moment's notice, you might get a reversal of what was just said or some statement that contradicts what was said on or off record. I just think it makes for a tough trading environment. With that said, it presents opportunity and not one that one should shy away from necessarily. But I am still a bit more cautious. I'm definitely not pessimistic, but I do think bear market rallies are a real thing, and I do think you might want to look at names that you're a little bit too full on or where you don't necessarily see where they fit in your portfolio, looking for opportunities to sell into these rallies and then allocate elsewhere.
All right, we're going to take a quick break. Fast Money, be right back.